All right, everyone. Just wanted to hop on quick and do kind of a two-part lesson here. First part is going to be what we look at the beginning of the day. Second is going to be a little bit on the mini weeks. So we always want to start on the daily. You've got the opens indicator, which is going to give you the yearly open, the weekly open, monthly open, and then daily opens as well. So we want to know where we are in reference to these opening prices, but mostly what the previous day is doing. So, first of all, overall, we've got a bullish fractal one in play. So we've got your accumulation, manipulation, expansion, retracement, expansion. After we've had this expansion, we're expecting retracement at some point. So at the yearly open is a great place that we could retrace from. Or we've got our failure swings that we know and love that are up here that we can possibly sweep as well. Key notes to it is you want to know what orders are coming into the market at all times. So if we're accumulating and we're manipulating to the downside, when these wicks are forming, that's a form of accumulation. We know that that happens and that we're confirmed bullish when we get an expansion away. So there's most likely a key level somewhere down here that we're accumulating off of. We don't just want that, we want that expansion away from it because this gives us intent. This tells us that everything we've accumulated is being pushed into the market. This is good. When we leave lows or failure swings, we want to make sure we're sweeping those and continuing bullish order flow. That means we're buying these sell stops. Where do we need to offload them? Above the market at failure swings and key points of liquidity. See how we offload here? We kind of stop a little bit. But then our target, our first target was the origin of the manipulation leg. So after this candle closes, the first objective has been met. So now we need to see what's going to continue happening. Are we creating a gap? Are we reversing from here? That gives us the information that we need to see if we're going to go to our higher targets or not. We leave a gap, clear intent to keep buying, clear intent to keep buying. So now we can zoom in and start seeing when we're going to slow down. So an expansion slows down or stops when up close candles stop closing below previous up close candles highs. Adversely, with down close candles, a downward expansion will always close below the previous down candles low. When we stop doing that, which we did on Thursday, that doesn't mean that we're not bullish still. It just means that this expansion is slowed down. So we could possibly be in a accumulation. A retracement can happen from here, or we can accumulate and continue higher. But the information is telling us that, okay, something's off. We're not expanding anymore. Be careful in the market. So when we come in to Friday here, this high and low are where we make our decisions for where the market's going to continue going. If we stay inside this candle, that means we're just accumulating. If we close below here, that tells me that we may be going for the next point of liquidity because there's no liquidity here since we took it from there. So we expect what to form here? Breakaway gap, directional gap, order block, um, everything that we know and love around key levels. So that gives me my bias for the next few days if we close below this low. If we close above this high, we've got targets above. No problem there. So on the daily, those are things that we need to be looking for to tell us what may happen for the day based off of how we're closing above or below the previous candle or not at all, which also gives us great information. So once we have that, we want to go down to the hourly chart. It's where we can use our daily divider indicator. So now that we know, especially opening here, that we're inside of the previous day, that was an indecision candle because it didn't close above or below the previous day. That accumulations and slow lethargic price action could possibly be in play. Like I said, until we close above or below this high, all we're doing is chopping in the center. Since the start of the week, the algorithmic week, we've been moving up and down over the opening price, which is always an indicator that we are in a consolidation. So from the daily down to the 1 hour, this tells me that price action may be a little funky because we're not expanding one way. We're not clearly reversing, we're going sideways. So scalping on lower time frames is more ideal. But as we're looking left, which is what we always want to do to the previous day, we want to find our main key levels, which are going to be our directional gaps and our order blocks. Directional gap here, we've already traded through. This is acting as support, which is what we want in bullish order flow. We want our key levels to act as support. If they're not, then bullish order flow has ceased for the moment. So if we close below here, I'm expecting this to act as resistance to then come down here. As you can see, in an expansion, the opening prices may not get touched, but for later, these need down candles. So when we start closing back down, it will cut through this like a knife through butter because we haven't touched these opening prices. This one we traded below and above, but we haven't been back to mitigate it yet. Same with 8 o'clock here. So as soon as we close below this, you can expect kind of a landslide. That's what we're looking at on the hourly. We want to know what is validating our bullish order flow, what's validating our daily bias, or is it invalidating it? So you don't need to think of 1,000 things. You don't need to mark up 1,000,000 key levels. Just marking up the ones that are close proximity to where you're at, the ones that will give you direction, like this tells me bullish is still in play. Failing to close below these key levels tells me that we're not bearish yet. We're still bullish, but we're moving sideways. And then from there, you can go down to the lower time frames and make better decisions. So the previous week, when we started, we had our manipulation because whenever we want to move higher, we always want to manipulate down. As we're moving lower here, I don't see too many gaps until we get back over here. That gap has clearly been holding up price. This dotted line is the equilibrium of the previous range. As we know from ranges, the high, the low, and the equilibrium are very important along with the open. So this should be acting as support. Support, support. We close back above the opening price of the week, come back down to it, and then we expand away. So this is doing exactly what it should be doing. Accumulation, sell side, buy side, retracement, expand. We continue the expansions, and this week is not doing what that week did. This week is distorting through time, basically. So this means chill out a little bit. But that's what we want to look at for higher time frames. Where are we going? What's validating our time frames and what's validating our bias, and then what's invalidating our bias. So using the key levels that we know and love, to put it simply, that's all we're really doing on a higher time frame. We want to know if things are validating what we think, and if they're not, then we can reassess. So now I want to go to the lower time frames and briefly go over the mini days. So the mini days are an algorithmic concept that starts playing in the time element of your trading. So inside of a range, high, low, equilibrium, and the open price are the most important parts of a timed range. The algorithm is always in a timed range. It's always creating structural timed ranges inside of them. The algorithm always needs to work into and out of a range in order to have a correct look back function. So when we start, the algorithm will look back to where we are in reference to the high-low equilibrium and the open price. Based off of where we're closing, just like on the daily, closing above or below daily candles or staying inside previous candles, gives us more information about what's going to happen in the next day. So if we start on Monday, Tuesday, Wednesday, Thursday, and Friday, focusing on Monday especially because that's the start. That's the start of time, and the first range developed in time is always the most important. We can look at the high, low, and the equilibrium to see how we're trading. So if you're trading Asia and London, that's great. If you're not trading till around 8 o'clock, like most of us, you have a lot of information to go off of, and you can zero in your information inside of these days based off of where we're at in Monday. So we took Monday's high. Monday's low is still open. So the first range of any type of cycle or week, if you want to call it, the high and the low are going to be true forms of liquidity. It's the first engineered liquidity. So when that's open and we're trading towards it, that becomes a high probability target. Depending on how we're trading around the open, you can get trades anywhere off of Monday's range. But the key to trading these days is to understand the look back function. So if I take Mondays off and say we're trading inside here and you've got high, low, open price and the equilibrium, we're trading at a discounted portion of this range and we have the opening price. When we're starting another day, you want to wait for the first few candles to open and to trade. This is like the opening range of Monday inside of here. We want to know how we're trading around the opening price. And if we're close to the low, we want to understand how we're trading by the low. If we're failing to close below the opening price and get anywhere near the low, that means we may need to come back inside Monday's range to the equilibrium to reassess price. So as we're trading inside here, this is a valid trade on a lower time frame. We want to see if we can take the high or the low. This entire day stays inside of Monday. So that means Monday's high and low is still the most valuable points that we're going to be looking for to get taken. As the next day opens, trade back around previous day's opening price. And we're still finding support in that area. So there's a few more key levels in here that we can look at. But we're focusing on the opening price for now. As we're closing back above it, we've got the previous day or the current day's opening price closing above. These are confirmations of direction. If we're closing back above opening prices and the previous day's opening prices are holding, then if they're acting as support, that's a bullish indication. Now, the first target is going to be previous day's high, and then right above that, we've got Monday's high, because this is internal liquidity inside of external liquidity. Expect it to go here. Although this is a target, we expect us to come above Monday's high. After we do that and expand above, you can see we use it as support to then project us higher into the yearly open. After this day opens, and we're on Monday's high, because that is a key level, and we close above the opening price here, that gives us our direction that we're still going higher. Come up, come back down, Monday's opening price, so our high. So we're rejecting off of a key level, higher time frame, coming back to a daily key level. As we're sweeping this and failing to close below Monday's high, that means we're not ready to go down yet. So this price is still holding. Yearly open. I'm not going to go through all of this price action, but here are key levels, equilibrium. You've got this equilibrium coming back up to. As we trade lower, the target is still Monday's low because that's your first form of liquidity. So get used to looking at either on the 4 or the 5 minute time frame the relationship between these days. And then after you start trading, whatever time that is, how these boxes kind of form. So as we go through other days, you can see as we traded lower, and this after you've already done your higher time frame analysis with the daily and the 1 hour, and you have your buy side and sell side zones marked out, you can see if we're respecting that, especially after we start 8 o'clock. We hit the zone, closing above opening prices, closing above equilibriums, opening price, having reactions, but we're using this as support. Even here, after we open, comes back down, opening price for support. This gives us our bias. So since this took out Monday's high, we're looking for this high to get taken, Friday's high, and then we've got our target still. Another thing we want to look at when we look left inside of our days are the directional gaps that are forming. So the predominant gaps that are giving us our bullish or our bearish indications, these need to be acting as support as well. So discounted gaps should be acting as support in bullish environment. So previous to 8:30 open, we've already taken Monday's high and low. We've used these areas as support, and we're expanding to the upside. So this is continuing the bullish expansion vibes. Here, we've got Monday's high that's not tagged yet, as we're trading lower, we've already had our accumulation. Inside here, we've got some key levels we can frame. Here's the OG. There's plenty more key levels in there that we can look at. Expansion block. All those we retrace to. After we open here, we've already kind of left the building, but we already traded above Monday's high. Traded above the previous Thursday's high here with a gap, and those are acting as support, so there's no reason to really come back down. This is the start of the day, or the start of a Friday. Leaving this open, and the days are expanding above each other. When we look left after we start here, we can clearly see that we're bullish. A very large directional gap. These ones you can grade if you want. Failing to close or even get close to the EQ. Taking the previous day's low here in green. These give you buy targets, sell targets, just using this reference. You could sell down to here based off of the order block that forms above this high to get you into fair value for buying. Looks like when we open here at 8:30, we sell right down to Monday's low. You've got OGC, key levels and reference with each other. Here's the opening price. Can always use previous day's opening prices. Get a nice trade off of that there. Monday's low gets swept, and then we expand. Inside here, we've got Monday's low, but you can see this opening price has been balanced. And then this is our large bullish directional gap. So as we're trading down into it, this confirms our direction that we're still moving to the upside. But I'm not going to go through every piece of price action because I did go through it a lot on one of the calls. But look at the opening price. Look at Monday's high, low, and equilibrium. And you can start to see some patterns that form. And we'll be going over it more and more as people have questions as well. So I'm going to stop it there so I don't go too far. But questions in the group will be very valuable, especially when you're studying this stuff.